All right, welcome everyone. It took a little longer than normal for me to catch up to YouTube, but I already see some hellos in the chat. So hello guys, welcome in tonight. This is our last AI circle for the month of May. We will get Kelly here in a second, but hey Jim, Eric, and Brian, welcome. Brian said his first time. Awesome. Well, thank you guys for being here. If you're not familiar with the format, I'll just kind of go through it real quick. Usually, what we do is a little market update. We'll talk about, and sometimes there's not many trades that are applicable to discuss, but any recent trades that AI has made. Maybe the reason a lot of you are here is for the Q&A portion. Feel free to ask questions at any time, and we'll cover them. Get you an answer, and then that is also your way to potentially be our Amazon gift card winner. So we've honestly had a mixed bag the last couple months. Sometimes we've had a ton of questions, sometimes we've had none. So hopefully we'll get some good ones tonight. We can give away an Amazon gift card to someone. But without further ado, let's get Kelly in here. Kelly, how are you?
Hey, I'm doing actually pretty well. I've been back a month now from my vacation, and honestly, when you like to go on vacation, you're happy to go, and then you're just as happy to come back.
Yep.
So now that I've been back a month, I need another vacation, but I don't have any, and I don't think Randy and the Flip gods will allow it.
Yeah, to be honest with you, I totally forgot that you did go on vacation a month ago. Feels
So
like a
did I,
while ago.
almost.
Cool. Awesome. Well, just a couple of things I had. I mean, we met 2 weeks ago. The market, and when I say market, I'm thinking of the SPY. Pretty much in the same spot that it was when we met last week. I would say the only thing that kind of caught my attention was Bitcoin made some new highs, and I'm sure you'll cover that. But I'll kind of let you take it from here. If you want to say anything to start, feel free. Otherwise, we can get your screen going. I guess I almost forgot the most fun part. We do have to get the disclaimer out of the way. So forgive me for that. But so iFlip Investor Inc. and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk, and you should speak with your CPA or financial representative to ensure that the iFlip Smartfolios that you select are suitable for your investment profile before trading in a live brokerage account. All right, now it's back to you, Kelly. Anything to start with or any screen share?
Yeah, and I guess I'll just add that the opinions that you do hear on this thing are mine and mine alone, and I'm sure that Flip as a company will disavow everything I say, which
Yeah,
is what they say for Jim Cramer when he's on Mad Money.
exactly.
So
I guess I'm responsible for my opinions then as well if I decide to give any of mine.
that's right, we
Well,
are.
cool. Well,
All
I'm
right,
gonna
everyone.
replace that with your screen share. Everyone should be able to see it.
All right, everybody. Thank you for joining. Brian, it's your first time, so hopefully today we don't have much to add because since the last 2 weeks from our last AI circle, honestly, nothing has really changed in the market other than what Lee mentioned prior. Bitcoin hit a new high and is actually backed off only to the old high, around $107,000 of coins as we sit today. I guess we might as well kind of lead off with Bitcoin because, again, it is the one thing that is at new highs or made a new high from the last move up. So here's a chart of Bitcoin, 107,451 right now. The high we hit was just here, 111,262. Where we're at right now is actually at the old, if it closed even here today, it would still be a close higher than the ones we experienced around Christmas of last year. Why did Bitcoin go up so much? Well, honestly, no matter what anybody says, it's still correlated to the stock market somewhat. Stock market, of course, had a huge recovery over the last 6 weeks. The recovery in the stock market, again, is directly tied, as we all know, to the language around tariffs. So if a tariff is announced, the market will go down. If a tariff is given a reprieve, a delay, like we had for the EU for even a week or a month or 90 days, whatever it is, the market will go up. The market hates the tariffs. They're afraid of the tariffs. Clearly, it seems politically, tariffs are being used as a threat. It is the gun behind the movement. It doesn't necessarily need to be fired, but the way our current political leadership looks at a tariff is to be able to create better deals from around the world from our trading partners, for which we all know they do need the consumers of the United States for their well-being, and that is the nature of the tariffs. I doubt really most any of these tariffs will really ever go into effect in full. They are strictly there for negotiation reasons. And if we all recall, this was used extensively by Trump in the first administration. And I could think of at least one major instance, Christmas 2018, when he announced the one on China that caused a quick 25% drop within like 2 weeks, only to bottom out on Christmas Eve and then recover. So that's what the nature of tariffs are. When the tariffs are lifted, the market went up and it just dragged Bitcoin through it. And even when the market stalled, currently right around where it is, Bitcoin actually edged out a new high. Given everything around Bitcoin, I remain bullish on it myself. Our systems did make a trade during this event and had a quick trade and an exit. So our Bitcoin Flipbit portfolio did pretty well during that, and is actually doing its job of taking half the risk and trying to participate in 100% of the gains. So we're doing a good job in the Bitflip.
Can I just, sorry to
Go ahead.
chime in real quick,
Chime in.
but I think it's important on here because we do have some new people in here. So the Bitflip Smartfolio, Kelly just described how it's created, but basically we're 50% invested all the time, or 50% buy and hold. The AI manages the other half, but the product, if you will, that is in the Smartfolio is called IBIT, or the symbol is IBIT. Just, and Kelly, I'll have you explain this in a second, but I didn't even know that the AI sold it. I actually last week I forgot I had some Bitcoin on Coinbase. I actually sold it. What I didn't realize though is they were going to charge me $15 to either buy or actually it's just on the sale side, I believe. But my point being, and I kind of knew this, but it kind of took a firsthand experience to fully realize it. Like, even if you just owned Bitcoin through IBIT on our platform, like, you can seriously whack off some fees, I guess.
Yes. I think, Lee, you're trying to refer to the fact that when you go to Coinbase or those other places where you have wallets, what ends up happening is you pay a very hefty percentage fee on the amount of Bitcoin you have. Generally, I think both on the buy side and on the sell side. I personally don't have a wallet. I actually waited for, for better or worse, I waited for the kind of normalized product of Bitcoin through the IBIT, which is offered by, is it BlackRock, put together the IBIT ETF, which essentially bought a bunch of Bitcoin, created their own exchange, and they use, when they buy, it's always, when you buy that ETF, you are buying Bitcoin, and it's regulated. It's actually insured. There's no wallet where you can be captured and tortured like the guy in New York looking for the keys to his wallet, if anybody followed that story. This is simply another security. And the way our Bitflip Smartfolio works is just as Lee described. We're always long 50% of whatever you put into it, and the other 50% is just traded in a momentum fashion. So if Bitcoin is going up, it will buy it and hope to make a profit and get out. And conceptually, what we're trying to do there is recognize that it's a volatile market. It is going up. We want to buy momentum to the upside, because when it does go up, it tends to go up in a large fashion. And when it goes down, it also goes down in a large fashion. So if we can capture the up moves as they move up, we're going to capture a lot of the upside. If there's doubling or tripling of price, which I do expect in the years to come, that we're going to capture a lot of that through the trading aspect of the Bitflip portfolio. And should the market ever crater and go down or remain down, we should only lose half of the money that anybody would own if they owed it 100%. So that's the concept behind the Bitflip portfolio, and it has worked true to form since we've created this. How long ago did we create this? It's been over a year, I think.
Yep. I believe it was released in February of last year, and we've had the GBTC on the platform for a long time, but I know the IBIT just came out last year, like you said. I believe it was February, but I could be wrong.
And we started early with that because the GBTC, although was our proxy prior to the creation of the IBIT ETF, the issue with the GBTC is the 2% management fee, whereas the IBIT is a much smaller 0.15% management fee to manage that by BlackRock.
Yep.
So it's much more efficient.
And one last thing before I turn it back to you, because there's a couple of questions in the chat, just in case people didn't know, any of your core strategies or core smart folios, they will get you a little bit of exposure to IBIT as well. I believe it's between 3 and 5% or so. So Eric asked a question about if you could include basically that IBIT in an existing portfolio. So it is included in some, and you can also use the Bitflip smart folio separately as well. But right now, the only thing that's in there is Bitcoin, or I'll call it Bitcoin IBIT. We don't have Ethereum or any others in there. And we've kind of covered that before. So go ahead, Kelly. I'll shut up now.
Finish up. Okay. Yeah, there's another question in the chat about if you can include this crypto group. No, I just so you know, everybody, if anybody would refer to this group over here to the right, this has Ethereum and some other things in it. No, Bitflip is strictly Bitcoin. I'm not a believer in Ethereum or any of the other coins. I think over time they will fall to the wayside. So all these other coins, although they still have a lot of sex appeal around them, I feel they will ultimately fall by the wayside as essentially Bitcoin becomes the Rome of the present day of this particular cryptocurrency product. Let's swing over real quick back to the markets and just go through the general markets real quick for today, so we can get to some Q&A. This is a chart of the Dow Jones. As you could see from the beginning of the year, the Dow Jones is essentially flat on the year. It's gone nowhere. It's maybe down 1% or up 0.5%, nowhere. If we look at the S&P 500, it is about the same, maybe down about 1.5–2% on the year. No big deal here. The market moved down because of the tariffs. As you can see what the talk of the tariffs did to the market. The market has now recovered essentially all of the fear of the language around tariffs. Personally, again, I'm a will opine. I think the market is probably underpriced the risk of future tariffs. It is now expecting the bill to be passed by July the 4th for the big, beautiful bill. And if we do get the big, beautiful bill to pass, which we think it will, we probably will make some new highs on the year at that time. And the market will just probably sit around in here, move around maybe 3–4% before July 4th, up or down, probably a little lower, waiting for the bill to pass so that it can have certainty towards where the markets will go in the future. So it's like all markets, it's always from one hurdle to the next. The most recent hurdle was tariffs that seems to have been priced away because the market has recovered and we feel that the tariffs really won't be implemented, so we have nothing to fear there. But what is the newest thing to worry about? Well, that's the bill, the big, beautiful bill. And we will hear language around that will move the market between now and the passage of that bill, which we expect before July the 4th. So again, I expect the markets to kind of maintain themselves through summer. Like they say, buy in May and go away. Well, they say that because generally this is the time when, we're not going to really move that much. And we're going to wait all the way till the fourth quarter, the end of autumn, the fourth quarter, to make a move one way or the other. My guess is that by the end of the year, we will be higher. But right now, I think we're going to be in a languishing mode until the big, beautiful bill passes and we hear all the language around it in the meantime. Let's go quickly to the NASDAQ. NASDAQ and the S&P are following basically the same thing. NASDAQ, again, flat on the year, maybe up 1% for the year. The one thing that's noted that we should note is the bond market. Remember, a lot of times you hear on the news that, especially from the Democratic Party, and again, I don't take political sides. The idea here is to do our science and to allow our customers to make money through smart folios and the science behind them. But I hear a lot of people talking about the bond market in such a way as if it's going to be a predictor of people's feelings around the economy. Well, here's a chart of the bond market futures. This is the 10-year Treasury note. And what I see is a whole lot of nothing. And if you look at this chart, if I were to go back all the way to 2024, I don't see much movement in the bond market. So to me, the bond market is telling us nothing. The 10-year note sits at around 4.5%. And it's been here, give or take 15 basis points for a long while. Remember, the lower in price it goes, that means the higher the interest rate. The higher it goes, the lower the interest rate. And what we're seeing here is really nothing. There is no information given to us by the bond market that could create any kind of indicator as to where the future holds for example, the American consumer, house buying, stock markets. As a matter of fact, consumer sentiment came out yesterday, and it came out much higher than expected. And again, that is another surprise to a lot of people that seem to speak in the pejorative of the plans that this country is trying to make to guide it through the future in terms of overall trade and reducing our deficits. Nothing to learn from the bond market. So if someone says otherwise, I'm sure you can mention that they don't really probably know what they're talking about. The oil market is something else. Obviously, we're trying to get oil prices down, and they are down. And as you can see, there's been a steady move down in price of oil. This is U.S. oil. It's a proxy for the price of a per barrel cost of energy. And right now it's at around $62 a barrel or so. The lows have been 56 when the stock market was really down. It's recovered, but it's not going to go up that much. Interestingly, though, we will also see that in the form of Exxon. Exxon's closer to its lows than its highs. But honestly, Exxon is still within about 20% of its all-time highs. Well, not all-time highs, but the recent highs it's had since COVID, which is around $120 a share area. The stocks that we have in a lot of our portfolios have languished from the beginning of the year. These are the pipeline stocks, Energy Transfer and All Plains American, and they have come off their highs in a significant way. However, I still personally hold them in high esteem, and I am attracted by their dividends. The dividends here back at these prices are still at 8%, which is where else are you going to get 8% and own all the infrastructure of these kind of companies? And even if oil prices go further lower, it doesn't necessarily mean these stocks go lower. It just means revenues maybe come down. And remember, during COVID, when there was no revenues, they still paid their dividend of 8%. So these still are good things to have in your portfolio, especially if you're conservative and you want that dividend. They've been proven to pay even under COVID. Let's move real quick over to the banking stocks. There was some great bargains at the lows. Here was Goldman. Goldman all the way got down, I know, to around $4.50 a share. And it literally bounced back to $600 a share. I mean, that is a $150 move. Goldman is best in class in stocks, whether you like them or hate them. If you're going to own a bank, they're the bank to own. JP Morgan, again, same thing, best in class. Had a huge 22% drawdown, but kind of recovered almost back close to its highs. I could say the same of Bank of America. They're all looking about the same. These are Fannie Mae. They're in a few of some of the stock things. These are things that have just advanced mostly because interest rates have remained very high. There is opportunity in looking at what these government-owned agencies are worth, is because at some point this existing administration may do something to offer lower interest rates for first-time home buyers. And the infrastructure they have to use, of course, is going to be Fannie and Freddie and Sally to do it. And therefore, there may be opportunities in these stocks, because they're government owned, to perhaps even advance much further. We've seen that. If you look at this is when Trump won the election. They've only gone up since then. And this, by the way, these are going up from $2 a share, and they've gone all the way up to 10. So these are things that are up astronomically as a result of an administration that's going to be friendly, even despite higher interest rates, to first-time home buyers. These are noteworthy things to watch. This is Fannie Mae. Here's Sallie Mae. Similar. Let's move on to some other just odds and ends, and we'll get into one last thing. So again, these are some of the stocks that are in our portfolios, the smartfolios, because we've been able to map them. Here is an example of one, CrowdStrike, brand new highs. CrowdStrike is the company that ultimately protects from viruses on large platforms. So if you're like Charles Schwab or Freddie Mac or Fidelity or even us, Flip, you use this kind of software to protect you from viruses. And this company had a huge problem when there was a huge leak, if you remember, back around August of last year. But hey, it's not going to stop them. It's really best in class, and we've made new highs here on CrowdStrike. I'm sanguine about this stock. I think it goes higher. This one here is Digital Realty Trust. This is a company that ultimately makes data centers. So if you need to make a data center, generally you go to a company like this, and they handle all the infrastructure, everything from water and electricity to land. So they are essentially, think of them as the registered contractor for building data centers. They're one of them. LandBridge and companies like this are companies that actually own a lot of land, where you either put a data center or you put a pipeline over it, and they charge you lease effects. So these are companies that work like as commercial service type companies, where they're providing land so people can use it. Generally, it's all over the country. I have high hopes for this particular company. It's kind of new from July of last year. It's been in an upward trend. I'm sanguine on owning this company, and we have modeled around it. Wasabi Trust. At first glance, it looks like this stock had some kind of a problem right here when it went down about $6 a share in one day. Why? Because they paid a $6 dividend right here. It was a huge dividend that they paid. And so basically, it wasn't the stock drop. It was the fact that they paid a huge dividend on a $35 stock. They won a lawsuit and paid a dividend. Therefore, if you look at it, really hasn't advanced that much since then. But all this company, there's only 3 people in this company, and all they do is handle minerals. So minerals is another thing that I think are necessary for the future of America, and ownership of minerals and mining, water, electricity are things that I'm personally want to be in and own. Other companies that I like, I mean, Tesla, I try to stay away from Tesla. It's very difficult to map electronically. AI, everything, it's not easy for us at least to find modeling that works on Tesla. I can say though that when Tesla was at 450, Mr. Musk's political affiliation cost him a 50% reduction of the price of his stock. It has recovered 50% of that since then. As the market has rallied, it's come way back. I'm ultimately bullish on Tesla, but I'm not exactly the buyer here. If it was me personally, I have no signal to from machine learning, algorithmic, or anything else to tell me I should buy it. But I do look at it. It is well off its highs. I would wait until the big beautiful bill passes before I'd make any more ownership or not of this stock personally. I think we've gone through that. Let me just push on one other button before we can go to some Q&A. It's the dollar. Let's look at that. Well, as the dollar becomes weaker since the beginning of the year. Here's the beginning of the year. The dollar was at about 108 on the dollar index. It's now at 95. So we're down, or is that 99? We're down about 8% or so. And who are we down against? Well, a lot of it's the British pound, and some of it, of course, is the euro currency, which are the two largest components of the dollar index. Why are we down? Well, we have huge trade deficits, and we have a huge deficit itself. Our existing deficit is 37 trillion. GDP for 1 year in this country is 32 trillion or so. So our debt has now exceeded yearly GDP. Everybody in the country, of course, is aware of this. But as a result of the knowledge of the huge increase of debt, the $9 trillion that were spent over the last, say, 5-6 years, as most of it, 5 years, and most of it is a result of COVID, have ballooned our debt. And if we have huge debt, that's going to weaken the dollar. If the big beautiful bill passes and there are some more amendments to it to reduce spending, and there's more Doge efforts that become successful, the dollar is likely to recover and become stronger. Ultimately, if you look at it, especially against the euro currency, if we were to look at it that way, and let's take a look real quick at, let's see if I have a quick way to get to them. The list, I want to take a list of the foreign exchange. Let's do that. Sorry, I picked the wrong one. This is kind of important. There we go. Let's look at the euro currency. It's, wow, what? All the way up to 112. I was just in Europe about a month ago. It was 108. And I am telling you, it felt cheap to go out to restaurants. It's already lost a huge amount since I've left. It's literally gone, the dollar's become worth 5 cents less. It's the reason the dollar's going lower is because the currencies before the dollar was strong, our interest rates were higher than the rest of the world. But now the dollar has weakened, and most of that is due to the currency our debt. And if we get our hands around the big beautiful bill and it passes and really truly does address debt, which a lot of senators don't seem to think it does enough, you could see the dollar getting stronger. But right now it has no real impact on anything the market is doing. They're not looking at the dollar. Here's the Great British Pound. You can see it is on a huge rally all the way up to $1.35. I was there a while back. It was $1. I remember it was $1.20 when I was there last. I mean, it was just, you can see the dollar is definitely getting weaker. And that has to do with us not passing our budget yet. So this will change also in time, I expect. So I'm keeping an eye on this. Periodically, you see trades, and there are some ETFs, like here's an ETF on the euro, a reverse one, that we might be able to trade. We do look at them, and we may build a smartfolio around currencies going forward, as long as they have tradable ETFs for us. Lee, I'm coming to the end of this, and maybe we can answer some questions.
Yeah, honestly, they were all logistical ones, just questions at irate club type stuff. I defy some other things. Nothing really around the markets. I'll just do a last call. I know Kelly has a call coming up soon. I do as well. So we've kind of covered all the market stuff, I guess maybe one question for you, Kelly. What and I'm not sure if we're gonna be able to meet in 2 weeks. I might be on a plane, but tentatively the next AI circle is going to be June. I believe it was the 11th. Let me double check. Yep, the 11th. So I guess my question for you would be, what do you expect between now and in 2 weeks when we meet again? More of the same? You think the market moves either way?
I think I addressed that in the beginning, whereas in my opinion, again, you sell in May and go away. Everybody's heard that. I think that's perfect. This instance, I think it's probably a good bet. The reason is because the only thing that's going to move the market between now and the 4th of July is all the language around passing the bill. We in any other language that may come out on the tariffs that are going to move the markets up or down. But the markets are not going to go down too much in it because of tariff talk. And the fear of going down too much is because they know that each time that's happened, something has occurred and language has come out from the administration to buoy the market back up. Just look at Tuesday's trade. We were up 700 points. Was that yesterday? So why was that? Was it up so much? And it was because over the Memorial Day weekend, the EU came back to Trump and said, "Oh yes, we will talk." And when he announces that on Truth Social, the market rallies. And so nobody's going to oversell this market when they know language could come out the next day to be able to circumvent that. So, and by the way, nobody's going to really buy the market because they also know that language could come out the next day or the next 10 minutes that will say, oh, there's a tariff problem, and then the market will go, sharply lower. When you have a market like this, it basically stays in the same because they know there's language that's both good and bad in equal amounts that will move the market violently. So that's one of the reasons why, no, I don't think much is going to happen between now and June 11th. And also, I don't think much is going to happen now between July the 4th. Yeah. So let's extend it for the entire month of June.
There you go. I didn't see any other questions come in, so I think we're going to call it quits here.
Good timing for today.
Yeah, we ran through a lot of stuff, a lot of good things too. Although, like you kind of said, not a ton had changed since we last met, which is fine. So thank you all for being here. Kelly, thanks for the words of wisdom as always, and opining, as you like to say. I think that's the favorite word that I've picked up from you. But thank you especially to the first-time folks for hopping on tonight. I'm sure we'll see you again in a couple weeks. And like I said, tentatively, and I'll put it on the screen. Oh, I actually will not. I did not do it. Tentatively, we'll be back here on June 11th. I just may be in a different location. So just stay tuned with your email. As always, we'll always send out the reminders of when the next AI Circle will be. But if nothing changes, we'll see you guys back in 2 weeks. Thanks for being here tonight, and have a great rest of your week.
Thank you, everyone. All the best.